Hey everybody, it's Erik Torenberg, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts. Hey everybody, and welcome to another special episode of Venture Stories by Village Global. I'm here today with a very special guest, Phil Bonello, and we're here to talk about the sovereign individual investment thesis. Phil, welcome to the podcast.
Thanks, Erik. Really happy to be here. Big fan of the podcast.
Awesome. So Phil, before getting into the piece, why don't we talk a little bit about just a brief on the background and the things that you've read that have informed formed the piece, and then we'll get into the thesis.
Yeah, absolutely. So, the first piece is The Sovereign Individual, which is a book that was written in 1997. It really centers around the concept of the leverage of violence. It talks really about the physical world and how nation states have had this kind of monopoly over violence and scaling violence, and how that has really led to the centralization of power. As we move more into the information age, that kind of centralization of power starts to deteriorate because governments that have had a monopoly over the physical world now don't have as much control over the information world, right? So this is a concept that I found really interesting in The Sovereign Individual, and that kind of helped to piece together a thesis that I was starting to work on that was based on kind of the idea of unchanging human motivations. And that was inspired by Jeff Bezos, which I think he was quoted as saying, I don't like to think about things that are going to change in the next 10 years. I think it's more interesting to think about things that are not going to change, right? And so I think he said, customers are never going to want slower delivery and higher prices, right? And so I started thinking about a thesis from that perspective. So the broad motivations that I use in this thesis are drive to acquire, drive to defend, drive to bond, drive to learn, and drive to feel. And these are things that were kind of borrowed from the book Driven. They think about things in a fairly different context, more from an organizational standpoint. But I try to restructure that and think about how does this apply to investing.
Yeah. Reid Hoffman and others have quoted the 7 deadly sins for a framework. That's similar, but just a different base point.
Yeah.
So let's get into the logic of violence here. And I've heard also this term symbolic violence to mean not just physical violence, but also sort of the monopoly on truth. The church used to have it at one point, and now sort of governments and nation states, as well as other institutions, sort of get to determine our realities. And so whoever is able to own that is able to exercise a different kind of authority, even if it isn't physical.
Yeah, absolutely. And I think that's one of the main points of leverage, right? And in the book talks a lot about the transition of power from the church to kind of the Protestant church, because the printing press changed everything. It changed their control over information. And that's obviously something that we're seeing now. So within the thesis, I talk a little bit about education and how I see that as like one of the major driving forces of wages and wage changes over the next, probably 10, 15, 20 years. We've already seen that a little bit because everybody has the same access to information. These large institutions no longer kind of have a monopoly, and it's getting harder and harder to justify paying $50,000 a year for an institution when you can learn a lot of what you might learn in a traditional institution on YouTube, right? Yeah. And when that becomes the case, then you can hire people from different jurisdictions who may have lower living costs, and that really changes a lot of things. It's kind of a cascading function. Education equalizes everything, so everyone can kind of have the same access to education. When people can develop the same skills as when people can develop the same skills as people in developed countries, then they can provide work for a lower cost. So that brings down the growth in developed countries while bringing up growth in developing countries. The next phase of that is that revenue in these developed countries, like the U.S., starts to decrease, right? So if growth is going down, their revenue from taxation is also going down. So then what happens is, okay, we need to increase our revenue somehow. We also need to increase growth somehow. So the first lever to pull is kind of let's turn on the printing press. So pump money into the economy. Let's hopefully grow the economy that way. Other way that you can grow your revenue is by increasing taxes, right? So we're seeing both of these trends develop right now in the U.S. and globally. U.S., we're seeing the emergence of MMT, lower rates, potentially QE. We're also seeing the wealth tax emerge, and this kind of battle against billionaires and big business. So then the next domino to fall is if taxes are going to be increased, if your money is going to be inflated, then how do you escape those trends? So then we have digital money, right? And it was really interesting in The Sovereign Individual, which was written, 22 years ago, is that they accurately predict the rise of a digital money. Digital money allows people to then opt out of these inflationary forces, these taxation forces, and so that's kind of like the final piece to a lot of this. With that, you can then cross borders much more easily. The exit cost of leaving a certain jurisdiction come down. And when you can more easily leave jurisdictions and conduct global commerce, then it becomes a much more competitive environment. Nations have to control. They have to compete over their citizens. They have to treat them like customers, right? Rather than kind of servants. So more business-friendly practices, smaller government interference. When it just kind of follows intuitively, because when you think about, okay, I have all this money, I want to get something done, is your first instinct, I want to give it to the government, right? Most people look at governments as pretty inefficient forces, highly bureaucratic, and so they're just not efficient. Singapore is a really good example of this, and again, mentioned in The Sovereign Individual 20 years ago, that they implemented really good business practices. They were low taxes, and they subsidized some of this like business growth. And now 20 years later, you can see the effects of that. So I anticipate that a lot more nation states, a lot of these sovereigns will, they'll try to reap the benefits of people leaving some of these developed countries.
Yeah, so raises a bunch of questions. So first is, it's my understanding that Singapore is also it's free market, but also sort of master planned, and with sort of heavy hand from the government. What has their government done particularly well?
I mean, in my opinion, and I'm no expert on Singapore specifically, but I think just bringing taxes down and making it kind of a haven is really appealing, right? If you're a billionaire and you don't want your money taken away, that's something that's going to increasingly be in demand.
Yeah, and what so you mentioned it's intuitive that governments would start to compete, and yet, or business-friendly practices, and yet in the U.S., for example, we see the opposite, where we just mentioned MMT, QE, the wealth tax. If Elizabeth Warren becomes president, et cetera. And so, when is there going to be sort of behavior change? It's sort of like when you're, a negotiation tactic is to go harder, but then you realize that you're losing, and so you have to back. Like when is there going to be backing off, or is it not going to happen?
Yeah, I'm not sure, honestly. Timing is really tough to predict, but I think people right now are not worried about any of this stuff. generally. It's not part of the everyday discussion. Like how can I make sure that my assets aren't inflated away, and how can I avoid taxation? Right, that's not part of, for the most part, that's not part of the conversation. What happens, with natural disasters and stuff is people buy insurance after those those things happen, and so that's probably going to be largely the case here. When the U.S. dollar really becomes a poor store of wealth, when taxes really get out of control, when billionaires and big business really start to leave the country, then we'll probably see some kind of change. But this is also part of the thesis that I tried to put together was there's this currently there's a drive to acquire, right, which is pretty much greed. And that drives, I think, a lot of what's going on in our economy and consumer demands. I think we're going to see a broad shift to more of a drive to defend. So what I mean by that is investing and using defensive technologies. So I think of Bitcoin as kind of a defensive technology in that it allows you to defend from seizure, it allows you to defend from inflation. And then I look at like kind of the whole crypto world in the same fashion. It's all defensive technologies. Someone recently termed it as dissident technology. That is really the application for these crypto applications. But there's not a demand for that right now. When we have really intense censorship, then I think we'll start to see that demand grow. But again, it's a tough. There are technological demands that we have to overcome, but it's also just a behavior change. We're used to outsourcing protection.
Makes me think a couple of things. So one is that defensive technology you talk about, cryptography and crypto more broadly, in the hands of China or something, could be used for attacking or increased centralization, right?
It could be, but I think the trend is that with cryptography, I can have, in a good encryption scheme, I can have the same level of defense as a nation state, and I can defend myself against attack from a nation state. And that really flips things on their head. So, I can hold $1 billion in Bitcoin, and I don't need to scale up my operation. I can do it individually. And that's really powerful.
Yeah. And so let's unpack how that, let's get into detail how that could work, because I guess what I'm saying is we haven't yet seen a government full on attack of some of these technologies. Where would you store that? Like if you store it in Coinbase, they don't want to go to jail and governments can threaten them. So at some point it's pretty hard to escape the tentacles of government. So what does it look? Can you paint a picture of what it looks like in terms of where are you storing wealth? How are you transferring wealth?
Yeah, exactly. So I completely agree with you. But that's why I think there's going to be a trend change. So from kind of these centralized technologies, something like Coinbase, to something more like, holding these self-sovereign technologies. So I like things like local Bitcoins, payment services like OpenNode, BTC Pay, Zap, things that can happen totally independently, and no one's holding your wealth, no one's controlling the way that you spend it. You're going from this outsourced protection model to really taking control into your own hands, and that's scary for a lot of people, right? With a lot of power, you have a lot of responsibility. If you lose your keys or whatever, then that's a big deal. So the user experience has to get way better for these defensive technologies, for these self-sovereign technologies. But that is the trend, right? Because I completely agree with you. Coinbase right now holds a ton of Bitcoin, tons of ETH, and if the government were to go to them, they're probably going to comply and hand over all of that Bitcoin, all of that ETH. And I mean, what do they do, right? So that's a huge problem.
Yeah, it is interesting. Chris Dixon in his post, I think 2018 or 2017, Why Decentralization Matters, he specifically mentioned that, hey, this isn't some, I don't know if you use these words, libertarian manifesto where we're trying to decrease our necessity reliance on government. This is more about decreasing centralization in internet companies, Facebook, Amazon, the aggregators. And we're talking about is the opposite. And what a lot of Bitcoiners are excited about is sort of the opposite. Are you less interested in sort of, I guess, where is he wrong if you think he is? And are you less interested in the sort of decentralized, the Facebook and the aggregators vision, or is it both for you? Are they both connected?
Yeah, I think there are, let's see. So services I still think will be centralized. There's, in building products, there's some benefit to having centralization, right? You can just move faster and you can build new things faster. You don't have to talk to a lot of different people. But it's the decentralization of assets, so data and money being the big ones that are then kept, I guess, self-sovereign. And the main use case for most of this technology, the big like 10x improvement, I would say, is not decreasing the rent assumed by some of these, by something like Google or any kind of middleman. I think the biggest thing is censorship resistance. So I would disagree with Chris Dixon in that, I guess in that light, because I really think that the killer use case for all of this technology is to be able to use it outside of the control of anybody else. And that is what removing the middleman really does.
Yeah. And so you mentioned that this dissident technology, the use case for it requires a behavior change. Right now, people are just too comfortable.
Yeah.
So is it in what's going to bring about this behavior change? And is it in government's interest to just keep things on the status quo? Like, is government like going to shoot itself in the foot, or why is that necessary? Why is the behavior change going to happen? What trends are leading it for that to happen?
Yeah, that's the big question, right? We've seen a lot of money come into the crypto space, and there's not a whole lot of user adoption. There is user adoption around speculation, right? That like all these decentralized finance applications, they're really applications for increased speculation. Exchanges are doing really well. That's because there's demand for speculation. I think the technology still has a way, there's a ways to go for a lot of these applications, a lot of these platforms and infrastructure. But I think even more than that, people just, there hasn't been enough censorship to force people to these censorship resistant type platforms. And I think that's going to be the driving force. I forget, I think it was in Iran recently where there was a 4,000% increase in a mesh networking service, and that's a prime example in my mind of demand really meeting the technology. And
yeah, and
yeah, that I think that's yeah.
Why is censorship on the rise as opposed to its opposite?
Because I think more information is kind of not controlled by these centralized authorities. So you do whatever you mentioned it at the beginning, right? You do whatever you can to kind of control that voice, and it's becoming really interesting because some of the information is being distributed through these centralized platforms, right? So the question becomes difficult for someone like Twitter. What do they censor and what do they not censor? And who's the final authority on censorship there? It goes both ways. With a censorship resistant platform, you're going to have things that a lot of people probably don't want to see, but that's freedom, right?
Yeah. And let's zoom out and go back to the logic of violence. Can you give sort of a brief historical overview of how that the logic of violence has evolved over time with different sort of technological revolutions? One quote that he talks about in the book basically says, hey, when defense is hard, government's going to take advantage of that. When defense is easy, and there will be increasing centralization. When defense is easy, there will be less centralization. And talk about how in different periods in history that has played out.
Yeah, so I'll mention a couple. The first is, the first agricultural revolution, in that farming brought like the advent of physical scarcity, right, and property rights. And so when people started to have property rights, they started to have to defend that property. And so then you think about, okay, well, what's the best way to defend my property? Well, the biggest guy in town might come around and just demand that he gets payment, or else he's going to beat you up, right? So that's like kind of the first case of coercion. So that guy comes around town and he says, okay, well, I'm either going to beat you up or you're going to pay me a tax, right? And so then he has a business around that. He gets a bunch of other people, and now he has a group of 100 people who kind of control the violence and the protection in that town. The next kind of phase, I think, was that we started to see these feudal societies kind of develop around that same idea. The next step was really the church. The church controlled all the information, as we talked about before. Information controlled the way that people thought, the way people acted, and they were actually able to control a lot of that violence. When there was less asymmetry of information due to the printing press, they started to lose a lot of that power of coercion, right? They controlled a lot of the violence. They controlled the big heavy hitters, the forces. The Industrial Revolution even made it a stronger force, because we had these weapons of essentially mass destruction and really effective tools of violence that, if used at scale, really can control the world, right? And I don't think it's a mistake that the United States rose to the place that it is today, right? For better or worse, they were really effective at administering violence in the right ways. And so now in the information age, there's no more monopoly on information. There's a decreased monopoly on violence for the primary reason that less and less value is in the physical world and more of it is in the digital world. So if more value is now in the digital world, governments can't necessarily control that world. It's outside of their realm. And so the more that we go into the digital world, the less control governments have over that digital realm, and really the more freedom individuals have to create their own kind of societies.
One thing I want to get your perspective on is that as technology has improved and we have seen new technological revolutions, there's often been this promise of decentralization, particularly as it relates to the internet. But in fact, things have gotten more centralized. Governments have gotten more powerful. Companies have gotten more powerful, and they use these technological advantages to consolidate. And that's sort of the story of humanity. Why is this time different?
Yeah. So to that point, I think things can get a lot worse before they get better. And I think they probably will, because then that'll make people, it'll force a behavior change, essentially. But encryption is really the tool that allows people to protect themselves. And that protection is really the key factor in all of this. Because I think, like I mentioned before, is I can now protect myself just as well as a large organization can with the tools of encryption. And so, maybe services are still centralized, but it's the assets, it's the data, your money that can be held on your person, right? If I know the private key, then I'm the only one that can access my money. And so I think that's really the main kind of the main thing that tilts the logic of violence and changes the power of coercion that states and even large organizations have over the individual.
And you talk about behavior change, but you also talk about driven, which talks about, hey, we have these base desires over time and they don't really change. How do you think about behavior change in light of that?
Yeah, so I think it's really important to think about where user demand is coming from. Especially this became really relevant in crypto because all these applications, all this money was pouring in, and there just hasn't been adoption. So it's useful to think about, why do people care, right? And what does this technology provide that no other technology does provide? And to me, it's the ability to protect. You can protect yourself more easily, more cheaply, more effectively than you could before. But like I said, people don't really care about that, and it's probably going to get worse before it gets better. People are going to have to lose a lot of money before they really want to protect the money that they have. Just kind of the way things go.
Totally. So now let's get into an investment thesis. We've talked about what's going to happen. Now let's talk about, how do we get rich off it?
Yeah. So I think the first point is information technology is an equalizing force on a global scale, and this is a pretty well-known thought, right? A lot of people make investments in this space around that idea. Education is increasingly going to be online. If the workforce is global, then how do you kind of think about remote work tooling? If location is less valuable, then what does become valuable, right? So I think there's an interesting idea of like something like New York City, right? If more work is happening remotely, then the value of New York City decreases because they can't demand the high property rates. So then those people move elsewhere. So where do they move? Why do they move there? What kind of services do they need? So you kind of just think about the flow of people, because this thesis of kind of globalization helps you understand just how things are starting to shift and starting to move. And so it's just really supply and demand, and how those scales are going to kind of tip. So like one vertical, which I mentioned in the thesis, is education. And so all education services really need to be rebuilt in some form or fashion. And I think that probably the key one is accreditation. When you think about institutions right now, why can they demand $200,000 for a tuition? It's less about the education that they're providing and more about the letters, right? MBA or whatever, your PhD, and that's really what it's about. It's that accreditation. So accreditation services are definitely a really interesting area of study. You've seen esports come up. Really anything that can be done without having to be in a certain location. That's kind of the thesis, right? Customized media feeds and just outsource work. I thought I saw a really interesting idea about there are tools for remote work, but how about tools for remote team building, right? And that's just kind of the idea of bringing your team together and maybe playing like some sort of video game. So just all of these things that make it seem like you are in the same location, but you're not.
And do you think people are going to live inside of cities or outside of cities?
I think the value of cities will decrease substantially. So I'm not sure it's binary like that, but when people can't pay, again, in developed countries, as wages decrease, people just won't be able to pay for those type of living habits, right? And so you have to go somewhere else. It just forces your hand, and so there will definitely be people who are like, yeah, I like living in a really densely populated area and I can afford it. And so I can see that trend play out, but I think it's more the specifics of how that is going to play out. I'm not so sure, but I think the trend is to kind of disintermediate
one of the other things you had here on your doc was marketing and biz dev for nation states. What do you mean by that? And I'm also curious if you're where your take is on charter cities.
In thinking about this thesis, I was kind of like, well, you know what? There's going to be a real demand for business-friendly jurisdictions and places with low taxes, and they're going to be friendly to wealthy people, essentially. Because in a lot of other places, they're just getting their money taken away, right? So how could I or how could a group of people work with some of these sovereigns that may be open to changing their taxation practices, their business practices to get some of this business, right? If Google and Apple and Facebook are going to get bullied, then how much of that bullying are they going to take until they go to another jurisdiction that might have a really skilled workforce and just more business friendly practices?
Can you talk a little bit about the differences of how of the industrial era and the information era, and how education needs to respond to either?
Yeah, so I think this is, again, kind of back to the idea of the value of location. In the industrial era, you have a lot of people that have to work in, for example, a factory, right? And there's a lot of value in everybody being in the same place. That's no longer the case. Even taking it a little further with 3D printing, you may be able to decrease the value of location even further. You don't even need these factories, and you can manufacture things on demand. That's a little further down the line, but you can kind of see the idea forming. And then with information, you don't need to be in the same place. It's a kind of a simple thesis, simple idea that you no longer have to be in the same place to provide value. And so if that's the case, then where do you want to go? Where can you retain the most value that you earn? It's kind of an interesting thing because individuals now have more leverage than ever, right? You can sit in your living room and you can organize a company or a business, and you can bring in $1 billion a year, maybe, just from organizing people all around the world. So entrepreneurs and investors have more leverage than they ever have before. But I think the common worker probably has more competition than he or she ever has before.
In the future, do you think that there will be thousands of Singapores and Hong Kongs and Israels, or governments or countries will consolidate, or what will be sort of the how will that look?
So yeah, I think there will be a lot. I'm not free. There will be more free competition, right? I was about to say fair, but I don't necessarily believe that. But it'll be more free, and so there will be more competition over customers, which are really citizens, just because exit costs are so low. If I live somewhere, they raise taxes. Okay, well, I don't want to live here anymore. If you're going to take another 10% of my money, I'm just going to go next door. They're providing a better service. They're more efficient. I'm going over there. So I guess the answer to that is yeah, I think there will be a lot of really business-friendly and wealth-friendly jurisdictions.
I mean, free competition usually leads to consolidation, right?
Yeah.
And M&A, and monopoly over time almost. So it's just interesting to think about in the context of.
No, that is a really interesting idea. I mean, so then I guess it depends. Can a larger jurisdiction provide services better? Like does the scaling land increase the ability to provide services? And I think traditionally that's probably been true. You have more people, you can build a bigger army. You have more. You have more power, right? And so you're more effective in your coercion. And the big trend here is that land is less. The land in the physical world are less important, and it's more reliant on the digital.
I want to transition a little bit into money, because after all, the promise of Bitcoin is digital money. Where are we right now, and where's it go? What's your framework for evaluating, where we've come and what's next?
Yeah, fiat money has never worked. So I think,
Never worked in what sense?
and that has never retained its value. So I think the best example we have right now is the pound, which is deflated 99.5% over 300 some years relative to gold, I think. And when you think about the U.S. dollar, since 1971, it's been 48 years of a free floating dollar. So it's not all that battle tested, right? And this plays into the broader thesis of slowing growth within a developed country like the U.S. And with a large welfare state and slowing growth, you have to print money to subsidize growth. And the incentives really are in place for the U.S. and for most countries around the world to print money and really continue this party. So right now the role for Bitcoin and the role for digital money is speculation. Everybody's like on exchange. They're on BitMEX trying to make they're just trying to make money. There are a select few people, I would say, within the crypto space who really are here for the underlying values, the protection, the defensive technology, trying to escape inflation, trying to escape taxation, trying to escape asset seizure. But the general public isn't quite there yet. And so I think it's going to be one of those things that most people will transition when it's too late, right? The idea of buying insurance after a disaster.
You mentioned fiat's never worked. Why don't you give a brief historical overview of sort of when we were on the gold standard, what that was like, why we got off the gold standard, and what the effects have been. Maybe if we could do the U.S.
Yeah. So throughout history, we've tried out a lot of different monies, whether it's rye stones or seashells or copper, and we kind of landed on gold for a good reason. Gold, more than any other asset that humans have tried, has been pretty resistant to inflation. It's had like a stock to flow ratio typically of about 2% growth on an annual basis. And so it's held its purchasing power relatively well. The U.S., the primary reason for getting off the gold standard is to spend money, right? And that's the reason that everyone who's ever controlled money has done the same thing. Because if you can control the money supply, you will control the money supply, and you're probably not going to decrease it because you control it. So
is the justification that we were in times of war, and in order for us to win, and we needed to spend, and we did win, and that was amazing for the U.S. and consolidated power, and so we should be grateful that we did that.
Yeah, pretty much. It worked. It worked well for the U.S. And for a while, we were able to keep the money supply under control. And then in 2008, it got pretty crazy. And so you can look at the money supply chart, and it's nice 2 to 3%. And then in 2008, and with quantitative easing, the money supply quadrupled. And that's a pretty scary idea, that you can hold a dollar, and a dollar is not really a dollar, And so that's where this idea of kind of a non-sovereign hard cap supply digital money comes into play. You can get out of that regime, get out of that paradigm.
Yeah. And explain for listeners who aren't familiar with quantitative easing, how do we make sense of what's happening?
Yeah, I think the simplest way is just injecting a large amount of money, liquidity into the system, and hoping that it flows down into all aspects of daily life. And so essentially it makes lending and borrowing much easier. When that's much easier and cheaper, then people tend to take on more debt and they spend more, and that's supposed to fuel the economy. And I mean, since 2008, stocks are up, right? And that's a key metric that people look at.
And so, what can we expect in terms of, like, if we think that, well, let me zoom out for a sec. So, how do you think about how many, currencies there could be in practice? Is there going to be consolidation towards one, or is there going to be different main currencies for different use cases? How do you see this playing out?
Yeah. So I look at money as a communication network, and communication networks tend to consolidate, and they tend to monopolize. And so I see Bitcoin, I see digital money in the same respect. There are certain qualities that these digital monies hold, and that really starts to build a narrative, in a way a religion that people start to follow. And what's really important about Bitcoin right now is this idea of the intolerant minority. There's a really strong belief in what Bitcoin stands for. And really, when you're investing in Bitcoin, that's what you're investing in. Because these protocols can change whenever, right? It's really the people who are upholding the values of the protocol. And if the people who are the intolerant minority of that protocol aren't aligned with you, then you might come back in 10, 15 years and the thing that you invested in is completely different. And so I think when looking at Bitcoin, so first of all, I think we'll probably consolidate around one or two monies or something. It'll follow like a power law distribution. And when looking at Bitcoin, a lot of people don't like it because it moves slow and it's very rigid. And the people in the community tend to be really mean. And when I see those things, those are really features to me, features of Bitcoin as a protocol, as a money, as a community, because I know that when I come back in 10 years, Bitcoin is still going to pretty much be the Bitcoin that I knew before, and the values that I really wanted to see in my money are still the values of Bitcoin.
What do you say to the argument that hey, the first search engine that wasn't Google, the first social network wasn't Facebook? Why is it necessarily that the first Bitcoin currency is going to be the winner?
Yeah, I think that defensibility is in it's in a lot of things. It's in the community, it's in the liquidity, it's in the infrastructure that's built around it. Scalability is an issue. Sustainability of mining is an issue, and kind of the incentive structure. But more than anything, what Bitcoin allows is and provides is assurances, like ledger assurances. So you know that every entry in that ledger is going to be there when you come back, and you can verify all of that. So more than anything, it's just an entry system, and that entry system allows you to opt out of the traditional government monopolized money.
Yeah,
and that's a sole purpose,
Right. And so how do you compare this sort of store value use case with sort of the utility or medium of exchange use case in cryptocurrencies more broadly? Or how should we understand that trade-off? Or
Yeah, so when I look at the cryptocurrency space, I separate assets into productive assets and non-productive assets. Bitcoin is a non-productive asset, and I think I think there won't be all that many non-productive digital assets unless they are very unique in some way, like a digital art or something like that. But when you think about non-productive monies like medium of exchange tokens, most of those will go away. It's this idea of Gresham's law, which is bad money drives out good. Bad money being what nobody wants and what can easily be inflated, and that bad money starts to get tossed around like a hot potato, and then that good money, that money that is really valuable is stored away, right? Every time you get some of that good money, you're putting it under your bed. And then there are productive assets. So in the digital world, just like in the physical world, you have cash flow producing assets. And so a really good example of that is Augur, a prediction market. And when you stake rep, you get an exogenous cash flow in ETH proportional to the amount of the rep token that you staked. So when you look at valuation methodologies within the crypto space, you can look at them broadly in the same way that you do traditional valuation methods. With productive assets, you can use a discounted cash flow, right? And then with non-productive, so productive assets, discounted cash flow. Non-productive assets, it's just really pricing, and you can try to look at where market demand's coming from, and you have to. It's really just demand and supply for non-productive assets.
Yeah, and so can you say more, what are the best valuation models for these assets, or what are the different versions of them?
Well, so for I built a bunch of spreadsheets that are just discounted cash flows for different tokens, and so you can look at the margin that's assumed on some of these protocols. So I think Augur's is like a 3% margin. So this idea of not having taking out the middleman and there's no rent seeking is kind of false, right? There's still a margin assumed on these networks, and that margin goes to the people who are providing this type of distributed work. So that you can use that framework to understand the value, the cash flow that goes into some of these tokens. And then for non-productive assets, it's a little bit more difficult, and I would say you can't actually value them, but you can try to price these assets. And so with Bitcoin, for instance, I look at realized capitalization, which is essentially the opportunity cost of every Bitcoin that's ever moved. I look at on-chain volume. I look at hash rate. These are just kind of health metrics that help me understand whether the fundamental Bitcoin network is keeping pace with the price of the asset.
What's sort of the bull and bear case for Ethereum as you see it? And where?
So the bull, like the big bull case would be that people start using ETH as money. Maybe DeFi becomes this really big moat, and ETH is collateral in all of these systems. And then ETH wins the money use case, right? And that's kind of the holy grail because it's looked at as $100 trillion plus use case. The bear case is that it loses the money use case and is then subjected to be a productive asset. And when I look at productive assets in the space, they can still be valuable, but they are working off of an assumed margin, right? When people provide work to to a given network, they expect a certain amount of fees coming back, and that's the margin on the system. That's the cost to use the system, and that valuation is far lower than a money.
Totally. Are there any other potential contenders that you think are exciting or have a chance?
For money?
Yeah.
Yeah. So I like Bitcoin, obviously. Decred is probably my second favorite because it offers a different type of security model, but for the same purpose of really strong assurances, right? So when I look at a money, what I want is the absolute highest possible assurances that it's going to continue to be that good money. And by good money, I mean it's able to track value in a ledger, essentially.
Talk about the promise of governance tokens generally, or governance projects, and what we've sort of seen thus far.
So I think there's a lot of interesting work to do in governance, in the whole governance space. What a lot of these models boil down to, though, is kind of a plutocracy of sorts, where you can buy your votes And that could be fine for some systems. There's a really interesting model which is called a futarchy, which is essentially instead of voting, you're betting. So it's this idea of like putting your money where your mouth is. If you believe in a certain idea, then instead of voting for it, bet on it. And if that idea is fulfilled, then you'll receive a reward, right? I think that's a pretty interesting model. Robin Hanson is kind of the guy who's pioneered that thinking. And there are a few projects like Tezos and a really small project called Immobio that are playing around with the idea of futarchy.
Why don't we think that prediction markets have taken off yet? Because
these centralized services are still pretty good. Like I can go on Bovada right now and I can place a sports bet. I'm not sure. I probably have a fairly low limit on how much I can bet, but they work pretty well. I do think that prediction markets are really they're one of the killer potential use cases for crypto because there are a lot of, it's essentially just a derivatives market, right? And there's a lot of design space there and a lot of stuff that will need to exist outside of the realm of government intervention.
But I'm more curious about, like, outside of sports, I don't know if people are betting on stuff. Sports politics.
Just generally?
Yeah. Like futarchy relies on people caring enough to bet.
For sure. Yeah. I mean, people probably aren't betting enough, but derivatives are a massive market, right? And when you think about a prediction market, if it's really set up perfectly, then it can be the source for all these derivatives.
Yeah. In one of your blog posts, you mentioned that you quoted Jeff Bezos in an old interview. He said that Jeff knew that the internet was uniquely suited for selling books as opposed to other goods. And then you asked, what are decentralized networks uniquely suited for? Do you have an answer to that or hunch?
Yeah. I mean, censorship resistance applications, right? Yeah. Like this idea of dissident technology. Yeah. That's what they're uniquely suited for.
Looking forward, what do you think is going to be sort of the biggest milestone or sort of watershed moment in the crypto space in the next couple of years?
I'm really excited for Urbit and Blockstack style applications, things where your data runs or your data remains local and applications then run local. Blockstack and Urbit are super interesting from that perspective because think about how all of our data is just out there. And when there's a really big paradigm change that needs to happen for users to completely own their data. And that's a technology change.
My guest today has been Phil Bonello. Phil, thank you so much for coming on the podcast.
Yeah, had a great time, Eric. Thanks a lot for having me.
If you're an early stage entrepreneur, we'd love to hear from you. Please hit us up at villageglobal.vc/network catalyst.